Yo, 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 what's going on? Emergency PSA for today. The markets had a nasty reversal. One that we had all been kind of waiting for a period of time. If you guys remember yesterday, we were talking about a couple things. That the market itself was very bullish, but we were at a key level of major resistance. And at some point, resistance resists, right? And we got that. We were riding strong in the morning. We were looking glorious. Things were looking beautiful for a hot second. And then the market kind of right into that 2 p.m. spot started to roll. It came out of nowhere, but the overall picture was at resistance. Hey, these things happen, right? So when you look at the markets and it's really hot, at some point you're going to get stopped out of the longs, right? You keep pushing it till the market just stops you out of your longs, and then you got to kind of flip it short, and that's what day traders do. Big ups to Levi Stock Hunter, who runs our options room. Holy shit, he was all over this for the last 2 days. Dude, he, right, just took it like a boss on Tesla puts, QQQ puts, and he had been working into this for the last 2 days. He was thinking yesterday that we were going to roll over, and he was doing a little bit of longer dated puts into this. And so I thought that was an interesting thing, as I'm just mostly a day trader. I don't even read that far into the tea leaves, but big up to Levi. So guys, what the heck do we do? Where do we go from here, right? That's the big question, right? So we stalled out at all-time highs, and we were down a decent bit. 1.5% is a decent amount, right? And, if you look at the SPY, we had a 1.4%, a down move, right? And so we're right at the 9 EMA on the SPY. We are right at almost the 9 EMA on the Q. So this will be the tell. Look, in past bullish thrusts, like we had here in the summer, oftentimes after big days, if you see oftentimes we'd have these kind of big days. See this big day here? And then, we ended up with an up day. And, we'd have these kind of big days down and then big day down. And then you'd have a green day out of it. You don't necessarily see this big day down here in August. And you have this nasty rollover and then the market bounce. And so it doesn't necessarily mean oh shit, the market's at the top, that, everything is over. None of that is happening. But we do have to say, hey, let's put some caution out there because we stalled at resistance. Maybe a few more down days would be ideal anyways. If you think about overall picture, if you like to long, you like to be a bull, then, getting a move down into, say, the 20 SMA or something like that would set up a nice kind of run, back into it. One thing to remember about breakouts is that it takes 3 tests of resistance to break out usually. So you got 1 test, 2 tests. So we do need to pull back and fill a little bit and push into it. That would be an ideal scenario if you're looking into some type of run in the market. Let's see what goes down, right? Tomorrow will be a tell, right? Tomorrow will be a tell. Do we get follow through, or was this a one-off thing? We have to give the benefit of the doubt always to the bulls because of the run we had, but we have to be cautious and always remember that one day does not constitute a pullback. I usually, when I do pullback setups, I like 2, 3, 4 days. Work off those extreme overbought conditions, and then you really get nice setups coming out of it. Let's take a look at the market breadth here, right? So you got your T2107, market breadth down 4% in terms of percent stocks over the 200-day moving average. And you can see here the T2108 is kind of stalled out. Did we get into that 80? We got pretty close. We didn't hit into 80, but we were damn near close, right? And we know in the past that when market breadth on the T2108 hits over 80 or close to 80, you usually get some snapbacks into the market. We got pretty close, a couple points away, and we're stuck right under resistance. Tomorrow's going to be the tell, right? We don't really know yet. And so I don't want to, you don't want to use scare tactics or anything like that because The market's been hot. Like, oh my God. You know where the market is right now? It was at the same spot it was right 3 days ago. Right? Like, so we have to always do that. So don't be, too wild about it. But we need a pull, right? So let's go with that, right? We need a pull, so let's go with that. So my game plan for tomorrow. So this is short and sweet, all right? I want to just trade really, really liquid names and stay away from the spec stuff, all right? Stay away from the spec stuff. I think the play is going to be to try to get some continuation off of this and reload the market a little bit. Let some steam out of the market. So ideally, if we get a gap up tomorrow, some kind of gap up, 0.3%, 0.4%, 0.5%, something like that, right? Then I think we play for the red roll and, we kind of get this market down into some more reasonable spots and let the tension come out. Like a retest of this. This was the breakout spot, right? That's the 20 SMA. A retest of that zone would be just incredible. That's gonna give us some great opportunities. So let's do that, right? Gap up tomorrow. We can go green to red, and then we just always want to be open-minded. If we don't see that setup, we may have to sit out the open and let the ranges develop. So the plan for tomorrow, we want to short the names that are up the most, that have the furthest to drop. So we have CVNA here, right? You got a nasty rollover from 63 to 55. Let me tell you about the last 3-4 runs in the market. I would say 3 runs. The last 3 runs in the market, CVNA tends to bounce the most because it's a highly leveraged play, right? High debt plays that are kind of turds, but still, right, are beaten down, so on and so forth. These tend to go a long way, right? So like a CVNA, like when the market runs, it's always doing like a double or a triple or sometimes more. And then when the market fades, right, it does the same thing, right? Because it's a piece of crap. So you've got this stock. It's up almost 1,000% this year too. Maybe you're going to get some profit taking. Maybe some people are going to take some profits, book for their taxes. Who knows, right? But this one falls the most when the market falls. So a gap up on this one. Look, this is a good breakdown spot right here, right? If we got any kind of gap ups, say an absence of PR, right? An absence of PR. We got any kind of shove, right? And we get into kind of this zone of love here. I think that's going to be a huge, huge tell for tomorrow, right? We could take that piggy short, and we've got room down to about $50. So you got 10% downside before you even run into, right, any kind of support on the daily chart. And, we may have to back and fill some more zones, right? I think we want to go with a firm too because this thing is up right over 200% in the last run. We haven't even broke under the 9 since it was $19. It's been trending up to 9 EMA. Look at that. Since $19, it's been trending up to 9 EMA. We had 46 million shares in volume today. Big, big sell. One thing you could do too, like I always kind of shade my MAs when I'm, day trading of recent. So, when you start to kind of turn in the red, from green shaded areas to red, that's usually a telltale sign that the market has turned. And so just something to kind of be mindful of. It will really help you with your timing, so like you can see, like if you're kind of hugging in, right, your zone of love is green, then when the, EMA crossovers happen and you start to shift from, green to red trend or momentum indicator almost, right? It's just a moving average crossover. Then you've got the red light to kind of short these things. And so kind of keep that into the back of your head too. I love to kind of simplify those things like that. So I think a firm has got some more room to fall, and it's got the liquidity we need. The big thing is if the market's going to get a little bit dicey, a little bit choppy, I want to stay out of the e-liquid plays. The e-liquid plays are great when the market is hot, but when the market unhots itself, you want to stay out of the e-liquid plays. You've got UPST here, stalled out at the 50 spot, right? Nice rollover, right into close from 48 to 43, so good range. You had 16 million shares there in volumes, right? As the Indian people say, as my mother would say, turn down the volume. Kunal, turn down the volume, right? We want to get the stocks with the most volumes that have the best range. So the ATR on this, the average true range, is 10% per day. So you got volume plus range. That's usually the sweet spot. See, a lot of times people go with volume, but then you have low ATR, right? So, for example, you want to play fucking Apple. Apple's got an ATR 1%, right? What are you going to do with that thing, right? Microsoft has an ATR of 1.63%. Dude, Bank of America has more ATR than Bank of America, damn bank stock, has more ATR than Apple. So, what you want to do is look for high ATR, but still a lot of volume, right? So I like Affirm, CVNA, UPST for the potential shorts. Let's see if we break through. Now, these all gap down. Let me get rid of this stuff. If these all gap down tomorrow, right? So like say UPST, right? Say this thing gaps down to like $40 or something, then we're going to leave it alone, right? Same thing with Affirm. Like if it gaps down this way, we're going to have to leave it alone. Like you can't really long it either because the structure of the pattern will have shifted. If it gets down that low, right, at the 90 EMA is going to start to roll over and you're going to lose a lot of structure in the pattern. So then you got to leave it alone. Then it's just a no-go, right? So if a big gap down, we leave it alone. If we gap up, then I want to look even in Affirm. I want to look into some of these, right, levels of resistance, right? Some of these levels of resistance to kind of start fading it off. I'll probably put some fibs on there and stuff too. That's what Levi uses. I'll probably put some fibs on there too to start layering in some potential shorts. And we'll see if this lasts for a few days. I don't think we need too much more. Tesla got shamangled 10 points into the close. I think this one probably too, right? The light gap up. Let's put this thing down and see if we can get back down in this. It's barely participated in this rally. Like if you see here from November 15th, right, to December 20th or so, December 15th, is not moved at all. It's barely participated in this rally. So on the large caps, I want to hit this one and, probably, maybe a little bit in the video, but I'm 0 for 100 on this thing. So I just want one revenge trade. I'm just kidding, though. Taking the video off the list. This is the one. You get a fake breakout of the flag today, a little bit of a topping tail candle. You're resting right on the 9. It finished down 3%. Let this thing break under the 9. We can get it right back into the mid-120s. Gap up on this one. Let's refade this one. I think it's going to trade a lot better than NVIDIA. It's got less fugazis. That one's going to be good. And then, of course, we want to take down 2 more. Right? Coin stuck at the top of the Bollinger Band. 60 million shares of volume. Got good enough range. 10-point range, 5.6% ATR, pretty good. And then Mara. Give me a gap up on Mara. We got a reversal candle on this one. Let me take out the post market here. And you'll see here, you got a hollow candle here, right? It's got room to $19, so we got 3 points. But frankly, when you get this extended, you're not going to probably pull back to the 9 EMA. The 9 EMA pullbacks are great for the first pullback. When you break out, the first pullbacks to the 9 EMA work really, really good. But the longer you run and the higher you get, the deeper the pullbacks you need, right? And so we want to be shorting these. And then if the market can pull, I want to look for the stocks that are still near its base, right? Still near its base that are not extended, like your PayPals, your Hood. There's a handful of this, that I still think are going to be good, Peloton, so on and so forth. But if the market stinks, you want to stay away from those names anyways. But I think that's kind of where we want to go. It's like if the market, decides to keep, going, at some point we still have some of these that are still pretty close to their lows that we can, trade. But I think, look, this thing's got room down. It's got a lot of room to fall too. So we just got to let these things play out. We knew this day was coming at some point. I was willing to just keep risking it till we got that kind of one fugazi, and we got it 2 p.m. I wasn't even at the damn computer. Woe upon me. So I missed the whole flush. I took my profits and ran. Go frickin' figure. I missed this whole thing, but it's a good thing we got an awesome team at Bulls, and Levi's leading the way on some of these guys into the afternoon. So, guys, let me know if you have any questions. Take care. Stay safe, people.